Good evening. I'm Dan Fitzpatrick at stockmarketmentor.com on February 9th. That's Tuesday. First of all, to members, I'm hosting what I call a cocktail party, but you got to bring your own booze because it's at your place, where we're going to be in the forum tomorrow night from 8 to 9 p.m. Eastern Time. Just to kind of have a chat with all members, anybody who shows up. It's not just a chat with me, but everybody else too. So it's going to be really, really active. I'm hoping you're going to be there with your questions, comments, stocks, etc., etc. I haven't done one of these things in ages, and I remember that they're a lot of fun. So hopefully you'll check that out. By the way, new members or wannabe new members, you can sign up for a free trial and get in on that as well. Okay, shameless plug done. LinkedIn. Here's why I want to talk about this stock. I mentioned this a couple days ago as far as buying it in the after hours, and then it was like, I think I forget exactly where I bought it, but I decided to do a little after hour trading, and I got stopped out after hours because it started going the wrong way. My after hours trade, which was a small loss, they're never big ones, at least if I'm doing them right, but my after hours trade really applies here too. I bought the stock based on my assumption, based on my theory that whatever the price was at the low there in after hours, and for crying out loud, it might have been like at 150 or something, but I bought the stock and I said, this is the low. This is why I'm buying it, is because I think this is the low. So we'll just go ahead and use this as the lesson. So just assume that this is the, like a 5-minute or a 1-minute chart after hours. And I'm looking at this and I say, okay, I want to buy the stock because I think this is the low. So I buy it about here, whenever it goes up a little bit. And then the next thing you know, it starts drifting down and down further. Okay, holy crap, I got a big loss on my hands. No, I don't, because I put a stop right underneath there, because I don't like LinkedIn. I think it's Tinder for people with neckties. But my whole premise for buying this stock was that this is the low. So when it turns out that's not the low, then there's no fuss, no muss, no emotion, no anything. It's just like, well, that's a cost of doing business. I had an idea. I took the idea for a ride. The idea didn't play out. Nothing personal. I'm out of here. So that was then. This is 2 days later. This is why I want to talk to you about this, because you could be buying the stock this day, which was Monday, under the thesis that, again, this is the low. Okay, we'll see the low is 102.81. We'll call it 103. This is the low. Now, a couple things. One, I really hadn't intended to get into, but I'm on a roll. So this is higher than this. You're expecting, like, this has gone down way too much. This is going to snap back. Okay, if it was going to snap back, a reversion to the mean, it wouldn't do this. It would have done that, or it would have done that. It would have done something other than just sit around here doing basically next to nothing. Not going lower, but not going much higher. The only reason this stock is staying down here at this level is because there's still a lot of selling pressure, selling into any strength. So anybody that's buying, they can get all they want, and they don't have to pay up for it. Well, that's not what you want to see if you're already long the stock. You want to see people having to pay up for the stock, but they're not. Okay, so this, if you bought this was your idea, 103, that was the low. The stock's got to stay above that. Okay, I guess. I would have even gone here and said 106.72, that's my new low. Because, again, I'm expecting, I wouldn't be after this kind of trade, but after this kind of pattern for reasons I just mentioned. The stock's down. It didn't snap back. But maybe I'm buying this wrongly and naively expecting that the stock's going to rally further. Okay, that's really okay too, as long as you have a stop. Either here or here. If you have a stop here, you can trade in larger size because you're not risking that much in dollars. If you have a stop down here, then you need to trade in smaller size because the distance between where you're buying and where you would be selling is greater than if you'd be selling here. So what happens then today? The stock trades lower. Either way, your stop is hit. This is what I want you to understand. Okay, $100. Okay, great. $100 is support for this stock, but it's really not trading technically right now. It's just under big distribution. So what I would suggest to you, if you're not long the stock, you know what, guys? There's easier trades out there to make. Go make one of them. But if you are long the stock, then this is what I would suggest. Look at the weekly chart. This stock has been down here. They're not growing. A stock or a company that's not growing tends to go from northwest down to southeast. And that's what this thing is doing. So don't assume just because it's fallen so much that it can't go lower. That happens all the time. Stocks just continue to go. So what I would suggest you do is if the stock starts trading below $100, then you need to sell your stock. Oh, but Dan, I'm worried that I'm going to be selling right at the bottom. Okay, here's how you handle that. I'm giving you permission to sell if the stock goes below $100, and here's how you get back in without being ticked off at Dan for causing you to sell right at the low. If the stock trades back up, and you do this, you decide this is your plan when you're selling the stock. Okay, if the stock trades back up to 102, I'm going to go ahead and buy back 50% of my position. So at least I'm back in. I've lost a couple bucks because I sold it a little below $100. I'm buying it back at 102. But hey, I think the stock's going to snap back big, so I don't want to be left on the sideline. So I'm buying it back at 102. And then if the stock goes up to say 103, then I'm going to get in with the same position that I had that I sold out down here because that stupid Fitzpatrick guy told me to sell if the stock trades down below $100. Okay, so what have you done? You have taken risk completely out of the game, downside risk, by selling just a little below $100. You've taken your loss, and okay, sorry about that. You've taken your loss. But listen to me. There's two sides of risk. There's also the risk that you're going to miss out on the wonderful upside that LinkedIn is going to have as soon as the market realizes what a wonderful opportunity this is. So your risk, in exchange for getting rid of all further downside risk, you are risking missing out on a $2 move on 50% of your stock and a $3 move on the other 50% of your stock. So you average those two together and you're risking 2.5% on your entire position. And in return, basically, you know, you're taking 90, 85, 80 out of the equation. That's a good risk reward to me, and that's one of the ways that you can sell a stock that just seems like you don't want to sell it because you're afraid you're going to be selling it right at the bottom. Oh my gosh, I can't do that. And you wind up just riding it into the ground. How many folks do you think held the stock when it fell this low? After all, think about this. Okay, this thing took a third haircut, 33, 34%. How many folks do you think held this stock? Or they bought it, like, oh, this is the low. 125, I'm in. And then they're still holding it when it's fallen another 20%. They could have avoided that by just having an exit plan. So you know what? I've just given you yours. Seriously, I've just given it to you. Now it's up to you to execute it. Okay, that's it for this video. A little longer than usual, but I hope it helps. And members, get over to the strategy session, and don't forget about tomorrow night's cocktail party. I'll probably show up with a martini, or yeah, maybe just an iced tea.